program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Good to have you with us again as we get going in this brand new week here at AusBiz. Let's take a look though on what happened last week to round it out. Global stocks coming up with their third straight week of gains on Friday, rising for 7 consecutive months. Investors were buoyed by quarterly earnings results on Friday on Wall Street, while the dollar climbed after hawkish comments from some Federal Reserve officials. For the month, the S&P was up 2.25%, the Nasdaq rising 4.7%, and the Dow up 2.5% for the month. Amazon shares rallied on Friday to an all-time high following its forecast for quarterly sales above estimates. That boosted the consumer discretionary sector, which closed up 4%. Apple shares fell after it forecast iPhone holiday quarter sales surpassed Wall Street expectations. However, Chief Executive Tim Cook flagging supply constraints. Netflix rose after it unveiled plans for a 10-for-1 stock split. Warner Brothers Discovery jumped following a report that Netflix was actively exploring a bid for the company's studio and streaming business. Western Digital shares surged to an all-time high following its forecast of quarterly earnings above estimates, and shares of solar panel maker First Solar also surged after surpassing expectations for third quarter sales. Colgate-Palmolive cut its annual sales forecast amid rising economic uncertainty. And among the oil majors, ExxonMobil beat analyst estimates for third quarter earnings underpinned by higher oil and gas production. And Chevron also beating estimates on record oil and gas production, boosted by its $55 billion acquisition of Hess and stronger refining margins. Well, parts of the US economy, particularly housing, may already be in recession because of high interest rates. That's the view of US Treasury Secretary Scott Bessent, who's repeated his call for the Federal Reserve to accelerate rate cuts, saying, "I think that we're in a good shape, but I think that there are sectors of the economy that are in recession. This is at odds with some Fed members, such as Jeffrey Schmidt, who voted against a rate cut, saying, by my assessment, the labour market is largely in balance and the economy shows continued momentum and inflation remains too high," while fellow Fed member Laurie Logan said, "I find it difficult to cut rates again in December unless there's clear evidence that inflation will fall faster than expected or that the labour market will cool more rapidly." Well, Chinese President Xi Jinping has proposed establishing a global body to govern artificial intelligence. Speaking at the APEC summit, he said a World Artificial Intelligence Cooperation Organisation could set governance rules and boost cooperation. The US 2-year Treasury yield fell to 3.57%. The 10-year fell to 4.08%. Markets are priced in a 60% chance the Fed funds rate will be cut by 25 basis points at the December meeting. Australian 3-year government bond yields are around 3.63%. The market's pricing in a 5% chance the RBA cash rate will be cut by 25 basis points at tomorrow's meeting. US dollar index rising on Friday. The Aussie dollar is currently at 65.4 US cents. OPEC Plus has agreed to a small oil output increase for December and a pause in increases in the first quarter of next year, moderating plans to regain market share due to rising fears of a supply glut. Oil prices settling slightly higher on Friday following reports that US airstrikes in Venezuela were imminent, but then retreated after President Trump denied he was planning an attack. Brent crude futures at $65 a barrel. Copper was off marginally, iron ore falling about 0.3% to $106 a tonne, and gold fell on Friday, weighed down by uncertainty over further rate cuts. Spot gold close to $4,000 an ounce, and Bitcoin is at just under 110,000 US and registered its first October loss in 7 years. Well, to get across what we're seeing on global markets at the moment, with a focus also on New Zealand, I caught up with Greg Smith from Generate KiwiSaver.
Yeah, a good week last week, but we actually started off a little bit negatively today. We're down about a third of a percent. So, yeah, not a lot going on domestically in terms of earnings. I suppose we'll be certainly looking at the bank reports that are coming across the Tasman. We've also got an unemployment number out. But, yeah, I suppose sentiment at the moment sort of dominated by international developments, particularly that earnings season in the US. But, yeah, we're a fairly defensive market, so a little bit lighter today.
All right. Well, you mentioned earnings season US. Obviously, that is the focus, particularly on Wall Street. What have you seen so far? Obviously, last week, 5 of the Mag 7 having reported.
Yeah, that's right. So I think there's been a little, yeah, it was a concern, I suppose, as always, given how far some of these stock prices have run. And I suppose you think you saw with some of those releases, some concern about how much they're spending and whether it's justified. So I think you saw quite differing reactions, when you look at Microsoft and Meta and the like, because obviously Meta has certainly got the checkbook out, as they all have, but you actually saw some quite notable positive reactions. And I suppose a couple that sort of picked up on, firstly would be Google or Alphabet. I suppose, the demise of Google search with AI is proving anything but. So obviously they're monetizing that, and see that stock had a very, very good week. And then of course Amazon as well, up 10% on Friday, doing well, not just in the cloud, which obviously is a familiar driver for them. Interestingly, it's really only a fraction of sales, but a huge portion of earnings, but also in advertising. So I thought that was quite positive in terms of what that says about the economy. They're continuing to invest as well, and it seems with good reason. And I suppose the standout as well, even though you didn't really get the share price reaction on Friday, was Apple. So we're those who've got iPhones are certainly loving the next iteration. The iPhone 17, I think, only came out about 10 days before the end of the quarter, and it had a noticeable impact on sales. As Tim Cook said, sales are running red hot and actually off the charts. So I thought that was obviously interesting as well in terms of what it says about the consumer there. And also the outlook was really rosy. He talked about having the best quarter in the company's history coming up. And you're going to have a company which is generating sales more than a lot of countries' GDP. So I think, the noises generally were pretty good from the big caps last week.
So, Greg, also focus on Wall Street is what the Fed is likely to do next. In fact, we've had quite a bit of Fed speak since that decision last week, in particular those who are reluctant for any more rate cuts at this point.
That's right. So obviously you had a couple of dissenters with that decision. Powell talked about it being a risk management cut. So basically risks to the inflation to the upside with tariffs, and then risks to the jobs market to the downside. So obviously that seems to be what they're siding with. I guess the problem for the Fed is that they aren't getting a lot of data, at least official data anyway. So they're having to sort of deal with that. Relying on private data and the like. Of course, one of the dissenters was the Trump appointee, Stephen Mirren, who wanted a 50 basis point cut. I think it was actually pretty predictable for him to say a December cut is not locked in. They're data dependent or data driven. They're not getting a lot of, as mentioned, they're not getting all the data they need. So I think that's sort of the conservative thing to say. But markets are still saying 60 to 70% chance of a December cut. And I think that's just really sort of waiting towards the risks of a softening labour market. And obviously there's a bit of political pressure as well. So I think, time will tell, when we actually get any sort of official data back online. But it would still seem that, we're looking for another cut in December, and the Fed's sort of sticking to its script, which it laid out a few months ago.
All right. Now, also just taking a look perhaps at our own central bank, of course, tomorrow with the RBA set to make its decision, and any chance of a rate cut certainly priced out now in the wake of the latest inflation data.
Yeah, that's right, for sure. So looks like all the focus will be on the great race, won't it, rather than the RBA meeting. But it'll be a huge upset for them to sort of come through with another rate cut at this point. So they could well be done. The interesting thing from our perspective, and I suppose particularly sort of those companies that are on this side of the Tasman operating in Australia, or those travelling to Australia, is that's not helping our cross rates. So we're now down to 87 and change there. So, and our central bank is not done cutting yet. In fact, there's probably an increasing chance that we're actually going to get a 50 basis point rate cut at the end of this month. And then to that effect, our own jobs data will very much be in focus this week.
Overall, how is the Kiwi economy travelling then? Clearly on that basis, you would say not well.
Yeah, that's right. I mean, there are some, interestingly, there's some green, it's a bit of a horrible cliche, but there are a semblance of green shoots coming through. So a key consumer survey from the ANZ and likewise a business survey was all about, the here and now being quite tough, but, being a bit of optimism around the outlook. And that's all sort of intertwined around the same thing. We've got rate cuts, they're feeding through, they're starting to, hopefully create a bit of optimism. That'll be well received by some retailers as we head into Christmas. Some retailers have already said they're starting to find things improving a little bit. We've got around about half the mortgage sort of book coming onto lower rates. The other bit of good news for our economy has been the ag sector, and that's been performing well for a long time. But we had that vote from Fonterra last week, and farmers have agreed to sell that business to Tellus. So what that is going to mean, you're going to have the average farmer getting around about 400,000 New Zealand dollars, and there's potentially going to be some trickle-down effects. They've been paying down debt. A lot of that money could come through in spending, so it's potentially over $4 billion set to feed its way through the economy from sort of farmers' pockets. So that's another bit of good news. Yes, it has been a tough year, but there's some semblance of brightness as we get into the end of the year and possibly into 2026.
So, Greg, any particular stocks you're focused on at the moment, or are you perhaps more focused on trying to pick a winner in the Melbourne Cup tomorrow?
Yeah. Well, that's right. I mean, on the stock side of things, just quickly going back to the US, our global funds have been very positive on Apple. In fact, that's the highest conviction holding in our thematic funds. So that story on last week and the outlook for the next quarter was really well received. Likewise, really positive on Amazon. That had a good move, up 10%, and Google, and that was up around about 8% for the week. So they're all good stories internationally. Closer to home, Freightways is a logistics company. They had a really positive update last week, so we like that in our Australasian fund. That stock had a really good week as well, so that was good to see. And they basically sort of said that the headwinds in the New Zealand economy are starting to abate. As for the big risk, the big race, should I say, there's not a lot of sort of Kiwi connections as there normally is, but I suppose there's a lot of interest in one particular horse, Buckaroo. That's a bit of a favourite, but there's a lot of headlines here today about a punter who put a $7 multi on back in January earlier this year of the TAB. And if Buckaroo gets in the first three, he stands to win over $700,000. So I think there'll be a bit of interest in that horse in some quarters in particular. But Buckaroo, we'll go with that.
Well, not just stock tips, but also apparently horse racing tips as well. That's Greg Smith from Generate. Let's take a look at the local market. Just ahead of the open, we are expecting a marginally negative start, off by around 5 points. Stay with us. We'll get across that in just a moment.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.